In this presentation, we will continue on with our comprehensive problem for a relatively low-income individual entering information into an Excel worksheet for the tax formula related to state income tax refund and gambling income. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Here is our tax worksheet. We basically have the tax formula. If you have questions about how the worksheet works, you can look at a prior presentation. We left off last time with the income of $22,900. We are comparing this to what has been entered into our tax software. Here is the tax software. We're going to match up what we're doing in Excel to the tax software so that we can give ourselves that double check. Back to our Excel sheet, we're considering two items that may be included in gross income. So here is the gross income, $22,900. We're going to go to our worksheet where we're going to enter the gross income, the income worksheet of $22,900. Now the first one, the state refund. Note that the state refund would only be included if we had got a benefit or a deduction related to it from last year, and that deduction would be itemized. So considering we're not itemizing, we probably are not going to need to record the income. Now remember, it's really itemizing last year. Did we get the itemized deduction last year? But if we're not itemizing this year, then it's probable we're not itemizing for the last year either. And therefore, even though we're going to get a 1099-G that reports it, which typically looks like something we need to report as income, in this case it wouldn't be because it's dependent on whether we were able to deduct in the prior year. Then we have the gambling losses, which is going to be another type of income situation. So the gambling income, we'll have the gambling income. We may be able to deduct the gambling losses against it, but there's going to be restrictions to that. We'll talk about that later. So oftentimes we'll get a 1099 for gambling income as well, oftentimes if we have gambling income. And so that is something that we'll have to include and pay taxes on as well, 1099 reporting the income for it. So if we scroll up top, we're going to say, all right, now we've got W-2 income, we've got the interest income, we've got dividend income, and now we have the gambling income for a total of $23,900. That then pulls over to the tax formula, $23,900, $23,900, $12,000 of the standard deduction, giving us the $11,900. If we compare that then to our tax calculation here, we got the $23,900 in the tax software, $12,000 standard deduction, $11,900 taxable income. Everything looks good so far. Then we'll go back to our tax worksheet. Now we've got the tax. We're going to let the software help us to calculate the tax. So if we go back to the software, we're going to say the software calculate the tax to be the 1,205 using tax tables to calculate it. So we'll say that's 1025. So we have that information. Now the tax credits and payments will typically change. Not the payments, but the credits will. So we'll typically use the software to kind of help us out. We double checked this number, and now we're going to use the software to help us out with the credits as well. So if we go back to the credits, we're going to say, all right, now here's a credit above, up above, which is going to be the tax credits to bring us down to zero, meaning we pay no taxes after these credits. Child tax credit, dependent credits. So that's the 1,205. And then we have the credits that are going to bring us below zero. So 1,205 plus, we're going to say this is the other side of the child tax credit that's going to bring us below zero. 1,295, that's 2,500. So if we go back to our forms and we think about this number, it's going to be on this tab. We're going to say this is how we got to that number. And we're going to change the child independent credit to the 2,500. Notice we're getting more of it, basically maxing it because we have more income. And so there's not a limitation as much for the credit. Then we have the earned income credit, which is going to go down as our income goes up as well. And that's going to be calculated for us using tables 2,620. So we'll put that here. We're going to say, all right, so this should be 2620. So then if we add up our payments, we have the 921 withheld. That doesn't change. We have the 2,500 and that gives us the 2,620 for the other. And that's a total of 6,041 credits, and payments. Bringing that then to the tax formula, here's the 6,041, here's the liability 1025, giving us a difference or a refund of 5,016. Going back to our tax software, we're going to say, okay, that's our refund, and something would happen here. I see what happened here. So this number should actually be not 1025, but 1,205. So let's change this. This is the tax liability, 1,205. We're depending on the software to calculate that. And that gives us then a difference of 4,836. 4,836 back to our software. That looks better. So that's going to track it down. And that'll give us a bit of a check on that. So we're relying on the software for some things. We're checking off other things, giving us a bit more reliance, a bit of a double check, even if we're entering this just in and of ourselves for the tax software. Note that we can also have the tax information down here. This is a tax summary in this particular software, giving us a breakdown that looks much more like the formula that we just had. So here's our income. Here's our adjustments to income. None. So here's the adjusted gross income. Itemized deductions, we don't have any. Standard deductions to 12,000. Income prior to exemption, the 11,900. And then the credits, the payments, and the credits that take us below zero, 4,836. Marginal tax rate, 12%. For more accounting information and accounting courses, visit our website at accountinginstruction.info.